Hi, folks. Dan Bird here on Thursday, Halloween night, October 31st. This is the daily scan, and we have quite a bit to talk about today. So let's jump into it. First, let me go to the homepage of the website. Anybody interested? This is the website, breakpointtrading.net, and there's a free newsletter right here in this little box. What you'll notice right away, hopefully, is the market bias chart has ticked down a little bit more. So last night I talked about how it was slowly rolling over. It's now below its moving average line. So it's continuing to go lower. And the overall market trend is now caution. So it's an orange, short-term bear signal right now. So what that means is we will not take any new trades right now. We can still search for them and run scans, etc., but we won't be taking any new ones. And the ones that I identified last night, we did not enter today. So we'll take a look at that in a minute. But first, we want to look at the overall market and see how it's doing. So if I go to the market bias matrix page, what you'll see is the S&P now is bearish. These are short term in the left column. Mid caps, the Russell 2000 just turned bearish. Technology sector just turned bearish. So all of these are starting to turn bearish. There's only one green one actually in the whole thing. So if you want to actually look at the charts for any of these, and we'll take a look at IWM, which is the Russell 2000, that's right here. Let me turn on my pointer. So Russell 2000 is right there, this one. And there's the chart. So if I click on that, we can actually see the chart, and you can see right there, 5-day cross the 21-day, big down day. In fact, this looks similar to a lot of different charts on the indexes and the industry groups and sectors. A lot of them look like this today. So I think the market has definitely turned. I think based on the earnings from Microsoft last night, AMD the night before, we'll take a look at some of those. A lot of those were not good. So it's pushing the market lower. So is the Magnificent Seven now going to start to push the market lower? And we're going to get what we normally get in October. We're going to get it a little bit later in the year. We'll see. Not sure. But if we go back here, and again, if we look at the color chart over here, we've got two reds. So short term and the overall is red. Medium term is yellow. The long term actually ticked up slightly to a green. But the overall trend has gone from green to reds, back to neutral, and then now back to red again. So it's trending that direction. That's the thing we want to watch out for. You'll notice also down here, any of these you can, if you want to take a look at them. For instance, natural gas is right here. Natural gas right now is very bearish. So, and it had a big down day again today. So not good for that. Lithium, which had been doing great. Lithium is actually still doing pretty well, but look at this huge move in lithium right here. Pulled back and then started back up again, and now it's pulling back a little bit more, but it hasn't given a short-term down signal yet. The short-term up signal, by the way, was right back here. So if you were just following the market bias every day, and you would have seen that turn into a green, and then the medium-term signal was right there. So a week later, roughly, that gave an up signal. Now that signal would have been after this run started, but the short-term signal would have been well before the run started. So that would have been a pretty nice run. So lithium actually still looks okay, but let's focus on the overall market and see what we're going to do today. So if we look at the dashboard, as you can see, the Dow had a bad day, down almost 1%. S&P down almost 2%. There's the S&P. NASDAQ down 2 3/4. So NASDAQ was the big loser for the day. And most importantly is the VIX. So the VIX now is not only above 20, it's above 23 and climbing. So let's go take a look at the VIX. We did this yesterday, and we'll take a look again today. just to get a sense for what it's looking like, because this is a sentiment chart. So the VIX right here, you can see it had a big update today. So typically the VIX and the S&P are inversely correlated. So you can see that they inversely correlated is starting to accelerate right here. So if the VIX is going up, then naturally the S&P is going down, and you can see it right there. So this could be just beginning. You can see the 12-month rate of change continues to move higher, and the moving average lines are now moving in tandem with each other, moving higher. So this is not a good look. The overall market right now does not look too good. The VIX was up almost 14% today, and it's about to break out of both of these highs over here. If it breaks out of both of these highs, then the market definitely is going much lower. So we'll see what happens. The other area I want to look at is the McClellan oscillators. Now these basically will give you, it's a moving average of the advanced decline lines. So you can see if it's above 0, it's green. That means there are more advancers than decliners. And if it's below 0, it's red, more decliners than advancers. But the big thing that I pointed out here, and I talked about this in the newsletter, is that as this is the NASDAQ 100, as the NASDAQ has gone higher, the advanced decline line has gone lower. So it's made new highs with fewer and fewer advancers. And in fact, now it actually made new highs again, but it's actually doing so with decliners instead. And the other thing I pointed out is this bearish wedge right here. Bearish wedge usually breaks to the downside, and it has just done that today. So right now, the NASDAQ 100 is sitting right on its 50-day moving average. And that's an area where if it breaks through that, it's probably going to be going down substantially. The bullish percent index is starting to accelerate lower as well, although it's not below the halfway point yet, but something to watch out for. Let's go back here to the dashboard, and we'll go down and take a look at first of all, the sectors. So the top performing sectors was utilities, barely, and energy, very barely. You can see just 1% and a little less than 1%. And the one at the bottom is technology. So technology has been kind of leading the market higher. The Magnificent Seven in particular have been moving the market up. And we'll look at that in a minute. But right now, you can see that little chart right there does not look good. The industry groups that were outperforming today, discretionary, the top two, staples, tobacco, very defensive sector. Fixed line communications and mobile telecom, those are both in the communication sector. So 4 of the top 5 sectors are aggressive sectors. And they were outperforming. So that's actually a good thing. And actually, there's another one down here for broadcasting. Energy was at the bottom of the top 10. On the right-hand side, these are the top 10 combined list. If you want to understand how I put that together, you can go back and look at the episode 1. And I explain all of that, but these are the ones outperforming today. So all of these stocks have been at some point in time in the past been in the top 10. So it's a very good list typically, and a lot of these names I recognize. In fact, Zim actually appeared on the scan for today. We'll look at that in a minute. But Carvana took off probably at earnings today. So huge breakout for Carvana. Sprouts Market also broke out. That's a black candle, so that's one to watch. If it pulls back a little bit and starts to go back up, that might be a good sign. But this has been just steadily trending higher. You can see why it's been in the top 10 just by the slope of the chart down there. And GoDaddy lately has been doing really well. So there certainly are standouts even in this market. And the idea is to find those standouts. Now, one thing I don't like to do is to try to swim against the current. So if the market is trending lower or getting ready to roll over significantly, then even though you can find some nice long positions, I typically don't like to trade those until the market is going in the right direction with them. So that's the way that looks today. Let's take a look at the 10-minute chart. So this is the 10-minute with the aggressive sectors. And you can see the red line at the top is last Monday's open. And the blue line right here is this week's open, this Monday's open. So we never got above last week's open. We basically moved sideways, tried to move up a little higher yesterday, but today just came crashing down. And I'll show you probably why here in a minute. So below that are the aggressive sectors, and you can see technology underperforming. Financials, interestingly, is one that did well. Discretionary, kind of flat. Communication services, this is where Google is. Google actually had a good report. And then industrials down here actually today did fairly well. And if we look at the defensive sectors, see how they're doing. Healthcare performed well today. Staples performed well today. Energy did very well. Utilities started to perk back up again, and materials did well. So the defensive sectors clearly did better than the aggressive sectors. And in a down market like this, that means traders are migrating or transitioning over to the defensive sectors and moving money over there. If it's just rotation, that's actually not a bad thing for the market. It's actually a healthy thing. But if they start to rotate to defensive sectors and significantly out of something like technology or move to cash, then the whole market goes down. So we'll see what happens. So let's take a look now at this is right here is the industry groups. You can see technology. So focus on the ones that are outlined in red. Real estate and technology are the two that did not do very well. And we can look at those in the trend models. The trend models will show you which ones have started to go short-term, medium-term, and long-term. You can see 3 of them this week. Whatever's highlighted happened this week. Technology happened today. Utilities was yesterday, and the day before was industrials. They all got short-term down signals. And if we click on the zoom in button, you can see right here, right there is where technology, the 5-day went below the 21-day. That's the signal for the short-term down. It's still above 0 up here, but it's starting to actually accelerate towards below 0. It's actually closed below the 50-day moving average. So again, that's a negative sign. It actually means that we should have a red arrow right there as well. So doesn't look too good. And then if we take a look at the other ones, I'll flip through them real quick. Here's communication services. This is where Google is. That one actually looks pretty strong. This one's rolling over, discretionary, rolling over below the 21-day. This is Staples, which is already rolled over previously. Utilities is starting to move down, but it's hanging in there above the 50-day. Here's healthcare. Healthcare started down way back here, and it is now really accelerating to the downside. Energy also moving lower. Materials, this is where gold is located. This is industrials right here, starting to move lower. Some of these are still above their 50-day moving average. So even though they're going lower and they've already given a short-term down signal, we have to see if it's going to bounce somewhere. But it looks like to me that everything is just starting to move lower. There's financials, and it's sitting right on its 21-day. And here's real estate, which real estate actually, all of its moving averages have converged here now. So it's going to go lower as well. And just from what I looked at on the bias chart, it looks like there's a lot of other ones that are actually going to start giving signals tomorrow and Monday. So speaking about tomorrow is the jobs number. And one of the things that I like to look at when the jobs number is coming out is the unemployment claims. So here's the claims. Claims actually have been going down for this month. However, we had 2 down unemployment rate reports the last 2 months. Went from 4.3 to 4.2 down to 4.1. And you can see as those were going down, this whole section in through here, the claims numbers were going down as well. And then we had a huge spike in claims. In fact, the spike was the highest in 52 weeks, highest actually in 2 years. We've pulled back since then, so the number of claims have been reduced significantly. But other than this one today, came in pretty light. The other two, even though they're falling lower, they're actually higher than the ones over here. So I am expecting, I would not be surprised to see unemployment claims come in at 4.1 or 4.2. I'm sorry. 4.1 is where it's at now, but 4.2, I would not be surprised that it comes in there. That will actually give the Fed cover to continue cutting if it starts to move up. Not sure how the market's going to take it though. The market might not like it tomorrow. So tomorrow could be a volatile day too, just like today was. And all of this could even continue. So the last thing here before we look at some of the scans is the Magnificent Seven. Right down here, you can see 4 of them had bear signals today, short-term bear signals: Apple, Microsoft, Arista Networks, and Broadcom. All had bearish signals today. So if we look at the Magnificent Seven on trend models, you can see right there, October 31st, 4 of them. Meta actually started going up on the 28th, but all of those are actually heading down. So let's take a look at all of them actually, and you'll get a sense for the overall look and feel. So this is Google. Google had a great report. I talked about binary events, which is earnings typically. So Google did well. Amazon had a big gap down. They reported today. Here's the reporting date right there, 10/31. Here's Apple. Apple had a short-term down signal. It's still okay. It's above the cloud, but they reported today as well. So continued to go down. Here's Meta. Meta went down significantly as well today. They don't report until February. Actually, they reported 2 days ago. So Meta actually looks like they did pretty well, but it's being taken down, in just like in technology as everything else is. Here's Microsoft. Huge drop in Microsoft. So Microsoft now maybe going below the 0 line up here, and it's already below the cloud. So that already indicates that it is in a downtrend. So Microsoft is not looking good. Here's NVIDIA. NVIDIA now doesn't report until the end of November. So they have a ways to go still, but it's clearly rolling over. That's a clear sign that the stock is starting to move lower. Has not given a short-term down yet, but it may soon. It's already sitting right at on the long-term MACD is sitting right at the bearish signal. So the point that I'm making here is that all of these Magnificent Seven may be leading the market lower here in the next few weeks. And then the election's next week, so it's going to be very volatile. Tesla's actually still looking good, had a great report. Netflix had a great report. It's hanging in there, just going sideways. AMD had actually not a bad report, but not good enough. And it's continued to go lower today. You see the long-term MACD it's actually the longest term, the green one, is actually starting to go below 0. So that's even more of a negative sign. And the MACD up here is already below 0. So AMD looks like it's heading lower. SMCI has just had nothing but bad news. Their auditors resigned. They had bad earnings, so everything's going wrong for SMCI. Oracle was hanging in there really well. It now is below its 21, heading towards its 50, but still above the cloud, and also sitting right at the long-term MACD. So I hope you're getting the sense for what I'm showing here. Palantir has been a very strong stock all year. So it's pulling back too. If you're looking for an opportunity to get into Palantir, you might get one soon. But again, all the long-term or medium-term signals are looking negative. Arista Networks had a short-term down signal today. It's moving lower. Broadcom, same thing, short-term down signal, sitting right at its 50-day moving average, still above the cloud, and the MACD up here is still above 0, but this one down here is already crossed over. So all of these are looking, with the exception of Netflix and Tesla, All of the other ones are looking pretty negative, pretty bearish right now. And I'm concerned that that is going to lead the whole market lower because that's what's been propping it up recently. So as a result, we don't want to really be taking any new positions. So if I look at the worksheet, first thing you'll see, and I mentioned this when we put Uber on the list, Uber is now sold out of hit stop. And I said that Uber was very risky because it was only 2 days before earnings. And you can see what happened. So we'll look at the chart for Uber. Again, binary event. Uber looked like it was hanging in there. Might actually was starting to look strong. But huge volume today. Big down day. It actually went below its 200-day moving average. Ended the day right at it. But I wouldn't be surprised to see this one continue to go down, especially if the Magnificent Seven continue to lead the market lower. So Uber, actually, we're out of Uber. It gapped below the stop price. If you remember, the stop price is up here on this red line, 77. And you can see the gap right here. So this is an example of why stops won't really help you if a stock gaps down like that. So with the stop in at 77, it actually opened to 74.50. So that's where that stop would have executed, somewhere in that neighborhood. So if we go back and look at the worksheet, you can see it stopped out at 74.50 right there, and that's a 7% loss. The only one that is hanging in there so far is Powell, and I actually moved the stop up on Powell just because of the state of the market right now. We did have it down here underneath this low, but it's starting to pull back. It didn't have too bad of a day, actually. It pulled back a little bit, but because the whole market is starting to roll over, this is a time when I like to move stops up. I want the stock to prove itself, and if it can continue higher. So my stop right now is at 250, and the stock is at 255 roughly. So I'm kind of expecting this to probably move lower as well and probably take out that stop. And if that happens, then we will be out with a 4% loss on that one. And we will have a clean slate. So there will not be any more trades that we're tracking. We only have some that are pending. And if we look at the pending trades, they actually hit the proposed entry, which was actually should have been here, 43 for this one, and 28.50 here that we talked about last night. But even though they went below those, we did not execute them because of what happened with the rest of the market today. And we could see those Magnificent Seven stocks that reported, like Microsoft and Apple. We saw after hours last night that they were heading much lower. So the whole market is weak. So we did not enter these. They're still on the watch list, and we'll continue to watch them. So if we look at a firm right here actually hung in there, looks pretty good. So our new entry, our entry that we proposed was at 43 right here. It went a little bit below it. The low was 42.78, but we did not execute it because of the status of the market. And then Zeta, same thing. There's our proposed entry right there. You can clearly see that it went below it. And in fact, it closed today below the 50-day moving average. So that is definitely a bearish look. We don't want to enter that one either. So again, we're going to make this prove itself. I'd like to see this get above the 0 line. So we are not executing these potential trades yet, and they might just end up coming off the list completely. One last thing is on the worksheet, I have the trend down here, one of these tabs. So this is the trend that I showed you before. It's on the home page, and short-term bearish. We'll look at that. We're using the total market index. This is from Vanguard. It's a combination of the Russell 2000, the NASDAQ, and the S&P, and the Dow. and some others. So it's really, it literally is the total market. And you can see right here, it gave a short-term signal right there. So that's why it is bearish. And as a result, we are in caution mode until this moves back higher. And whenever we have an orange symbol right here, and that actually gets carried over to the daily scan, so you can see it right up here, the market trend, as long as we have orange there, we're not going to take any new positions. We can still add stocks to our watch list, but we're not taking anything new. And speaking of that, if we look at the only 2 scans of the 4 actually resulted in anything today. So I'll show you the ones that that hit the 2 scans. The first one is downtrend reversal. I'll go through these pretty quickly. So there's MCOR. You can make a note of them if you want. MCOR has been, and you'll notice that these are all had been in the top 10 list before, so they typically will have a pretty nice looking upward sloping chart. So they reported today. Looks like they did fairly well. Next one is Entergy. Entergy did great, also reported today. So that one took off. Gen Digital, same thing, reported yesterday. That one is in the software group. That one looks great. KTB, this is in clothing and accessories, reported today, had a great report. So that one looks great. And then Zim, which actually is on a number of different lists. One thing I don't like about those, even though they look like they had great reports and that stocks took off, I don't like to chase them when they go up that high. This one right here, though, this is not a result of earnings. This is marine transportation. So, and it's in the industrial sector. So this one actually is probably the best looking one of all of them. So I may actually add that to the watch list chart. And the only other one that that gave anything today was the new 52-week high downtrend reversal scan. So on this one we have Douglas Emmett in the real estate. This is a REIT, but that looks like a terrible chart. I don't like that. Now this is made a 52-week high right there, and I'm looking for things that are pulling back to the 21-day moving average, which this one did, but it actually fell through and closed at the low. So that's not a good look. The next one is one we actually looked at yesterday, appeared on the list yesterday, but it's actually looking worse today. So again, I made it to the 21. It had a 52-week high over here, made it back to the 21, but it may be headed down here to the 50. So that's not a good one. And the last one is one we've already talked about. That's Zim. So this is the one that probably of all of them today looks like the best chart. And I probably will add that to the watch list tomorrow. But I want to see the whole market turn around. I don't like the market moving lower. Now, one question that a subscriber asked me is, could I talk about TQQQ? And TQQQ is the triple Qs, triple NASDAQ. And the place that I have these is on the portfolios page for the market timing system. And this gets updated every day as well. You can see the 3 on the top over here. This is the double the Qs. The TQQ is triple the Qs. SSO is double the S&P. The ones below it are the inverse. So those are bearish ETFs. You buy them long if you want to have a bearish position. All right, and this one just triggered today because it gave a short-term bullish signal. This is the S&P, because the S&P is moving lower, so it triggered a long on that particular ETF. But you can see TQQ right here. And if we click on that chart, this does not look very good. And it actually gave a down signal back here. So again, it's right on the website. The signals are right in there. Gave a down signal all the way back here. Even though it tried to recover, it's significantly heading lower. And it closed at the low of the day today. So this is one that we do not want to be in right now. It's a solid red candle. On the opposite side of that is the SQQQ. And this one should be doing the opposite, which it is. So the SQQQ has a solid white candle. It has not yet given a short-term up signal, but this is one to perhaps think about getting into. You can see the money flow has been positive. The accumulation distribution is starting to move up. So if the market continues to go down, especially into next week's election, then this one for the SQQQ, this is 3 times the inverse of the NASDAQ. So if the NASDAQ goes down 10%, this will go up 30%. Or a better way to say it is it went up 7% today, so the NASDAQ was probably down, what, 2.5%. So this one went up 7%. So this is one to think about, but you have to be sure this is not for investing purposes. You can see how these, especially the inverse ones, because in general, we usually are in a bull market. And right now we're in a secular bull market, which will probably, even if we have a downtrend short term, in the long term, we should be continuing in that secular bull market. So these quick bursts on the inverse ETFs may not last long. So you have to keep that in mind and be ready for it. But right now, today, looks like it might have given a good signal. And if that continues, then these will probably turn into long positions tomorrow, QID and the SQQQ. So that's my comment about TQQQ. I would not be in it right now. In fact, if anyone is in it, I think I would be out of it. And the went to cash, actually, let's take a look at it. Went to cash right back here. So that was the signal to go to cash right here on October 23rd. That was the signal to go to cash. Even though it came back up, it looks like it's probably going to be a pretty good signal. So big question right now is, will the Magnificent Seven continue to lead the market lower? Right now, we have to assume that it will. And in general, the market looks like it is set up to continue to roll over and head down. So be careful trading out there. All right, so that's it for today. Thanks everyone for joining. Please give me your comments. Please subscribe if you can, if you think that we should keep this channel going. I just started it this week, so I'm going to see how it goes. And it does take a lot of effort to do this every day, but let me know what you think. So that's it. I'll stop sharing here and checking out. Thanks, everyone. Talk to you tomorrow.